Have you ever borrowed money from your friend at 2% interest and then lent it to your other friend at 7%, where he thinks he can double the money by investing in crypto, meme stock, or by trading? Congrats, you're basically doing the Japanese carry trade, but with friendship risk. And no, there's no one to save you if your friend returns with all the money lost. Today, we're diving into one of the most sneaky, powerful forces in the financial world, the Japanese carry trade, and how it might be quietly shaking up your stock market, your portfolio, currency, and maybe even your next vacation. Let's break it down. Japan's interest rates? Practically on the floor. They have been close to zero over a decade. Basically, banks saying just take the loan. No need for interest. We'll see. So here's what the pros do. They borrow in Japanese yen at these dirt cheap rates. Then they convert the yen into dollars or rupees or euros or literally anything that gives a higher return. They then invest in those high yield and pocket the difference as profits. This strategy is called the carry trade, and when it works, it is beautiful and magnificent. Like seeing a ninth wonder of world. Why are you wondering? Our man retired preaching compounding. And you still are asking why ninth? Don't forget the eighth wonder, compounding. Anyways, this strategy is called the carry trade, and when it works, it is beautiful and magnificent. When it doesn't work, well, that's the 2008 hedge funds. They're managers. Let's just say things got carried away and even took out the economy while carrying. So, why is Japan always involved? Well, two reasons. The Bank of Japan has kept interest rates ultra low for decades. Japanese investors and institutions have a huge appetite for foreign bonds, stocks, real estate, commodities, your house, you name it. Now imagine this, trillions of yen flowing into global assets. US treasuries, Indian bonds, European stocks, commodities, your house. It's like Japan is invested everywhere. But here's where it gets spicy. In 2024, Japan finally started seeing inflation rise, and the yen fell hard to 30-year lows. So the Bank of Japan is thinking about raising rates. Just thinking, mind you, they've been thinking since 2007, so need to panic. If they do raise rates, even a little, the carry trade unravels. Why? Because borrowing in yen won't be cheap anymore. If yesterday in $1 you get 100 yen, now you're getting only 90. So investors rush to book profits on the high-yielding assets. Translation? By big money exits emerging markets. Currencies crash. Stock markets tumble. Why? Because big money is greedy. If they had $100 to invest, they will leverage it, take loan against it to book more profits and increase risk. As always. So, let's say Japan does raise rates. Suddenly, the dollar, the rupee, the euro, they all feel the pressure. Why? They rush to convert back to yen, creating selling pressure on other currencies. In short, high-yielding assets are getting converted back to yen. Funds flee. Everyone's yelling, carry, trade, unwind, like it's Black Friday at Walmart. Run, baby, run. And you? You're sitting there wondering why your mutual fund dipped 5% even though you never invested in Japan. Welcome to the global finance web, my friend. One sneeze in Tokyo and Mumbai catches a cold. Here's the big picture. The Japanese carry trade fuels liquidity across the globe. It's quiet, invisible, but powerful. And when that liquidity dries up, markets go into a caffeine withdrawal. It's like taking away coffee from Wall Street. And without caffeine, everyone's confused, angry, and suddenly talking about macroeconomic tightening instead of last night's IPL game. What should you do? Well, if you're an investor, keep an eye on Bank of Japan policy moves, dollar-yen currency levels, bond yields in Japan, US, and India. Don't be overinvested in the market. Because if the carry trade begins to reverse, risk assets like emerging market equities, crypto, and even tech stocks could take a hit. No panic, just awareness. Have a battle chest ready, or as they say in Tokyo, Okiru. So the next time someone says, Japan's economy is boring, just smile and ask them, do you know who's been financing your bull market? The Japanese carry trade might be the quiet engine behind the financial Ferrari you're driving. And hey, if the Bank of Japan ever goes full Volcker and hikes rates like it's 1980, just know things might get carried away again. If you like this video, drop a like, subscribe, and tell me in the comments. Where do you think all that cheap yen is flowing right now? And until next time, stay curious, stay informed, and don't get caught borrowing yen to buy meme stocks now. Thank you.